Good morning, everyone. Welcome to today's daily pitch, 12th of February 2026. Let's dive into the latest economic events, technicals, and see what's moving the markets. We will start with yesterday's economic data, see what were the numbers for the non-farm payroll and unemployment rate, and we will see for today what do we have as pre-planned economic data before going to our trade ideas and analysis. Let me just double check the sound quickly and then we can proceed with our session today. Okay, guys, so looking at our economic data that we had yesterday, of course, the main focus was on the non-farm payroll and unemployment claims. Knowing that both were really better than expected, specifically talking about the non-farm payrolls, the forecast number was 66K, the actual number was at 130K, even higher than the forecast and the previous. As for the unemployment rate, it was at 4.3%, lower than expected, while the forecast and previous were at 4.4%. But whenever we look at the charts, we see that the market reaction was not really relevant to these numbers. We didn't see much of dollar strength or movement, just a bounce back. And looking at other asset classes, looking at gold, we didn't see much of a market reaction. My personal opinion is that the market participants wanted to see worse than expected numbers. Usually the market right now are focusing on the cutting of interest rates. So in order to continue this narrative, the lowering of interest rates, market participants wanted to see lower non-farm payroll, higher unemployment rate. In this case, the Fed will be focusing on lowering interest rates faster than expected or more than expected during the upcoming year, because they will be looking at the employment data, the bad employment data, so we will cut interest rate. So that's why I believe that these numbers didn't hold too much weight. Keeping in mind that tomorrow we have the CPI numbers, we will monitor and see what will be the inflation figures. As for today, we had the GDP data for the UK. The GDP for Q4 came in lower than expected and lower than previous. The previous was also revised. What do we have else? We had the manufacturing production. This is the most important, I believe. The GDP, here it is quarterly and here it's the year over year. I usually look at the year over year, it's more important. What I believe, it came in lower than expected. Moving on during the day, well, we have just the initial jobless claims. Usually the initial jobless claims doesn't hold too much weight. It's a weekly report and it's fluctuating between a range of 180 to 220, 230K. So anything higher or lower than these numbers, then we could see some market impact. And that's it for today. As for tomorrow, well, hopefully tomorrow we will see better volume and one-sided movement. We have the GDP for the Eurozone, and most importantly is here the CPI data for the US. The CPI year over year is expected to drop from 2.7 to 2.5. And the core CPI, let me check another website here. It's not showing what is the forecast. It's not showing as well. The core CPI is expected to increase here the month over month. We will see tomorrow's economic data and what will be the market reaction. Moving on to the charts. As we were saying, the dollar index, after moving up to the 98 approximately, then having some weakness, specifically talking, we had the retail sales numbers. They were worse than expected. And as we know, the retail sales, it's very important because although this report usually fluctuates a lot, but the retail sales is very important because the consumer in the US contributes in a high percentage of the economy. So the retail sales lower than expected. This gives us a signal that the economy is slowing down a little bit. But here yesterday with the unemployment rate and non-farm payroll, you can see that we didn't have a significant market movement, just a spike up and still stabilizing. The treasury yields are still above the 4% at 4.2 approximate, while the VIX is flat. There is no major fear in the market taking place. Let's move on to our first pair for today, which is GBP JPY. Well, To start, fundamentally speaking, what's mostly moving the GBP JPY is the Japanese yen price movement. Previously, the Japanese yen saw some strength due to it was a safe haven. Then it had some weakness because the market starting to price in that the new government will start making some economic stimulus, and here in this case we are having a conflict between the monetary and fiscal policy. And whenever the elections took place last week, we had the buy the rumor sell the fact. Correct, the new government won, the markets are expecting the government to make a stimulus, but we are seeing some Japanese yen strength because this was already priced in. Now, technically speaking, several areas I will be looking at. By the way, if we have a look at the GBP JPY, we can see that the GDP numbers that we had today for the UK didn't hold too much weight. We didn't see like a real strong market reaction, just slight wicks. So fundamentally, technically speaking, couple of areas of interest I will be monitoring. Scenario number one, in case, let's zoom in a little bit, in case I see that the price action here is starting to get weaker and candles are failing to break lower, I will be looking for the following price action targeting approximately the 210.5. This is the first scenario. While in case we are able to break lower, and here this zone is a little bit tricky because as you can see, these candles broke and then snapped back up, and in case I want to see the price action retesting again the 207, I want to see a break below the 207.6. So here we have a tight range. So preferably for me, I prefer in case I see the price action testing the 207 and having a rejection similar to what we have here on the left. In this case, I will be monitoring the price action in order to have a look at this. And I would like to note one thing. For anyone having problem understanding what do I mean whenever I say a rejection or just consolidating, on Monday we're having a live webinar. We will be discussing how to trade the lower time frame, the 5 minutes and the 1 minute, but of course not watching the noise, looking at this area, at the specific areas of interest. So for everyone, I have already shared the link in the Telegram channel. Register, it's a live webinar. We will have live examples and you can ask me all your questions. We can discuss them together. It's a very important webinar looking at sniper entries. You will get a better risk to reward ratio, so don't miss it. Back to our GBP JPY. This is the first area of interest. This is the second area of interest. And the last one I will be monitoring is here. I would like to see a break above the 210.5. An intraday bullish candle close above this level. The next candle making a lower wick, failing to break below these candles here, below the 210. In this case, my target I will be looking at is the following. Let me fix this one. I will monitor the price action here at the 212, 212.5. So these are the scenarios I will be looking for on GBP JPY. 3 areas of interest. Other than that, I will be not entering anything. Moving on to the US equities. First, what was happening with the US equities? A lot of it was taking place. Last week, we had some earnings for very big, important tech companies. Even though the earnings were better than expected, but due to the high capex and investments, investors were scared that these companies are investing billions of dollars and they are asking the question, what is the profitability with regards to this high investment? That's why we had some sell-off on one of the several major US tech companies, and of course this will be reflected on S&P 500 and Nasdaq. But right now, as you can see, that investors were buying the dip whenever the S&P 500 several times was rejecting the 7,000. It was unable to break above the 7,000, rejecting, moving down, rejecting, moving down, just currently trading in a tight range or consolidation. So I will be, let me put these 2 areas. I will be looking at the 7,000 flat. I believe in order to break the 7,000, we need a fundamental catalyst that is supporting this move up. This could be tomorrow, higher than expected, lower than expected inflation data. This means the Fed could start cutting interest rates faster or more than 2 times this year, and this will be boosting the S&P 500 above the 7,000. And in this case, we should be very careful because we will never know where the next reaction will take place. So as you know me, preferably I would like to see any asset class making a pullback, retesting these candle lows at the 6,750. I will monitor the price action, and I would like to see some price movement like this. This is the first zone. This is the second zone in case we have something supporting the break above. And the next zone I will be looking in case we broke below the 6,750. My next area of interest I will be monitoring will be here. Okay guys, so in case we broke below these levels, I know it will not be like a straight line going direct, but I will be monitoring that 6,500 to 550. It's a very important level. Technically speaking, whenever we broke, we retested, and several times price approached this level. Look, even here, we had a technical double bottom and then price snapped back. So anytime the price will be retesting the 6,550, I will monitor the price action. I will be looking for any technical formation indicating reversal, a double bottom, a consolidation like this, and candles breaking the consolidation high in order to take advantage of such price movement. And in this case, you will have a beautiful ranges to play from here to here, and then from the 750 to the 7,000. So beautiful ranges. These are my couple of areas of interest I will be looking at on S&P 500. And now let's move on to gold and see what is going on. Before moving to gold, if you like our content, don't forget to like, follow, and subscribe. If you want us to analyze any currency pair, you can type for us in the comment section and we can make the analysis together. Moving on to gold. Well, to be honest, yesterday I was expecting to see a better price action on gold, especially with the non-farm payroll data and the numbers we had. This was our previous analysis. As you can see, gold is just consolidating this range. It didn't test this area or any of these three areas. And even here, whenever we broke, we slightly broke and the price just consolidated with no clear direction. So for me personally, I will be moving this a little bit up. And the same trade ideas will still take place. I will be looking for something like this. I would like to see another retest of the 4,970 or a retest of this level, the 4,870 as well. And the final area and the most favorable area, which I believe in order to reach this one, we will need some economic data or just any headline supporting this move, so we can test the 4,700. But realistically speaking, these are the areas of interest I will be looking at. I would like to see 4,960 to 70 being retested, or in case we broke higher. Number one, in case we have the volume and volatility to break higher. Next candle retesting, I believe we could be moving up to the 5,200. Other than that, inside this range, I will not be trading at all, because here where you got stopped out and you will lose your capital, just candles making upper wick and lower wick with no clear direction. So that's it for gold, guys. 1, 2, 3, 4 areas of interest. Put alerts and don't keep watching the charts. The price action is choppy, especially if we compare the price action that we have here or in these two moves compared to this consolidation. It is not the best price action to trade. So that's it for today. Hopefully you enjoyed our session and we will see you soon. Thank you so much for joining and take care.